If you still have lots of uncertainty in financial markets, and people are debating the different type of growth scenarios that could be unfolding over the next couple of quarters, we've been grabbing onto this idea that it's going to be a U-shaped recovery that stands for unsure and uncertain, and a very bumpy one, if anything. And that we think should actually still play to the dollar's advantage versus most currencies, whether it's the Australian dollar or some emerging currencies or Asian currencies for that matter. It won't be able to beat the Japanese yen, but there's certainly good reasons for the dollar to hold up quite well.
Yeah, Paul, we're hearing more talk now about this Nike swoosh, meaning you have a longer, not such a steep recovery as you would in a V scenario either. But bottom line here, I mean, what do you think you see that the market isn't currently priced in? I mean, are you just worried that perhaps even with the reopening of these economies, that demand won't come back as quickly? Are you worried about a second wave? I mean, what's the source of this slightly pessimistic outlook?
I think that's a very good question, and I think we're obviously beholden to what the fundamentals are telling us, and we think that those are still looking pretty ropey. We saw this type of optimism to a certain extent happen back in February, where many people thought that, well, this was a very Asia-specific problem with regards to the outbreak, and come the end of the first quarter and going into the second quarter, there will most likely be a strong bounce back. It feels like things are repeating itself at this point, and again, it makes me feel somewhat uncomfortable that once we get further indications about how deep the global slowdown is going to be, and I believe so over the next few weeks, the markets will increasingly have to factor that in, and risk aversion could come back.